Welcome back to the Daily Crypto Roundup, the show that keeps you ahead of the market every single day. Today has been one of the most complex and fascinating days we've seen in a while. Not because of one huge headline driving everything, but because of a cluster of developments happening all at once. From major banks adopting crypto infrastructure, to Ethereum quietly tightening its supply dynamics behind the scenes, to whales placing enormous leveraged positions on ETH, to institutions ramping up crypto exposure on the final stretch into year's end. Meanwhile, Bitcoin is consolidating just below the $90,000 level as markets brace for the Federal Reserve's big rate cut decision next week. On top of that, we've got new token speculation, structural developments in XRP's escrow mechanics, and even early signs that certain altcoins may be preparing for December volatility. It's one of those days where every story connects to the bigger picture, and we're going to break it all down so you can see how these pieces fit together as the market moves into a critical macro window. Before we dive into today's headlines, a quick reminder that we're running our weekly XRP giveaway all the way through Christmas. As always, 15 to 10 XRP go to the most insightful, funny, or impactful comment of the week. And then we give an additional 5 XRP to a random listener who rated the show 5 stars. It's simple. Rate the show on Spotify or Apple, leave a quick comment saying "done," or share your thoughts on today's episode, and you're automatically entered. The support you've shown this show lately has been unbelievable. The ratings, the comments, the shares, and it genuinely pushes us higher in the podcast rankings. If you enjoy this content, if you're learning from it, or if you just like staying ahead of the crypto headlines, tapping that 5-star rating helps more than you realize. Right. Let's take a look at the latest prices as they stand right now. Bitcoin is currently trading around $89,400 to $89,500, refusing to break above $90,000, but also refusing to collapse underneath its recent support. Ethereum is sitting around $3,017, which is down slightly. But the real story is what's happening behind that price, not the number itself. XRP is hovering at about $2.04. Solana is trading in the low 130s, around $130. BNB is sitting at around $890. Tron is around 28 cents, Dogecoin is just under 14 cents, and Cardano is around 42 cents. So overall, it's a very tight, very tense price environment, and you can tell traders are holding their breath ahead of next week's macro catalyst. But prices only tell part of the story. What matters today is the flow of information, the structural changes underneath these assets, and the moves institutions are making while retail sits and waits. Let's start with what is easily the biggest mainstream adoption story of the week. One of France's largest banking groups, BPCE, we're talking millions of customers, has officially announced that it's integrating cryptocurrency trading directly into its primary banking app. Customers will be able to buy and sell Bitcoin, Ethereum, Solana, and USDC directly inside the same app they use for day-to-day banking. This is monumental, because every time crypto enters a traditional banking environment, it makes the asset class more real to millions of people who previously wouldn't touch exchanges. Think about how many retail users don't want to create separate accounts on Binance or Coinbase or Kraken, but they would absolutely tap the Buy Bitcoin button if it appeared next to their balance and debit card. This is how adoption grows in the real world. Not through hype, not through bull runs, but through infrastructure. And when one major bank takes the leap, others follow. We saw this with stock trading integration a decade ago. Now we're seeing it with crypto. Next, let's talk about Ethereum, because this is where things get genuinely interesting. New data shows that the amount sitting on centralized exchanges has fallen to its lowest level in years. This is not a trivial metric. This is one of the most important long-term indicators of price potential. When coins leave exchanges, it usually means one of two things. People are taking Ethereum into cold storage, or they're staking it. Either way, it reduces sell pressure. If demand increases or even stabilizes while supply is funneled off exchanges, the only thing left to adjust is price. This is how supply squeezes begin. You might not see it on the chart immediately. You might not feel it in the daily candles. But the foundation is shifting, and that matters more than whatever color candle you see today. To make this story even more compelling, a major whale wallet, known as Pension USDT, opened a massive $60 million leveraged long position on Ethereum today. This isn't retail. This isn't someone experimenting with a hunch. This is a large, calculated bet that Ethereum is undervalued and positioning for a rally. When whales open leveraged longs of this size, it's not because they're guessing. It's because they see something in the data, liquidity gaps, supply tightening, or the approaching macro conditions, that gives them conviction. And when Ethereum whales act with conviction, the rest of the market eventually pays attention. We are going to pause here for a quick word from our sponsors. Stay with us.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
Let's shift to Bitcoin now, because while the price hasn't been dramatic, the context around it is. Bitcoin is consolidating just below the $90,000 level, and it's doing so with remarkable consistency. Every rally attempt into the low 90,000s gets rejected. Every dip into the high 80,000s gets bought. This is classic pre-macro behavior. Markets are waiting, not reacting. Because next week, on December 9th and 10th, the Federal Reserve will hold its next rate-setting meeting, and markets are currently pricing in an 80 to 90% chance of a 25 basis point rate cut. If the Fed cuts, and especially if Jerome Powell signals that more cuts are coming in early 2026, Bitcoin could see a momentum ignition event. Rate cuts weaken the dollar. They strengthen risk assets. They expand liquidity. Bitcoin loves liquidity. But until traders know the Fed's exact tone, we're stuck in this pressure cooker environment where everyone is waiting for confirmation, and nobody wants to be early. While we're talking macro, institutional liquidity is one of the biggest stories flying under the radar. Several reports today suggest that major global banks and institutional desks have been increasing their exposure to Bitcoin and Ethereum quietly over the last 2 weeks. This isn't the sensational institutions buying the top narrative we saw in early bull runs. This is accumulation during uncertainty. And historically, institutional accumulation during periods of fear is one of the strongest precursors to the next large move upward. They're not buying meme coins. They're not chasing altcoins. They are building positions in BTC and Ethereum, while retail traders sit on the sidelines trying to time the dip. Institutions play the long game. They look at rate cycles, liquidity cycles, and adoption trends. And right now, the long-term picture for crypto still looks incredibly strong. Next, let's talk about XRP. Not the sentiment story from yesterday, but a completely different angle that emerged over the last 24 hours. Analysts have been discussing the possibility that Ripple might eventually be required or pressured to release or sell up to 25% of its escrowed XRP supply under certain future regulatory or structural scenarios. Now, this is not confirmed. It's not guaranteed. But anytime XRP's escrow gets mentioned, the market pays attention. Because XRP's supply mechanics are uniquely complex. If even a portion of that escrow were released unexpectedly, it could impact liquidity, token flow, and investor psychology. Again, nothing is confirmed, but it's a story worth mentioning because it has major long-term implications. Another XRP-related story circulating today involves a high-profile investor who publicly declared that he sold his entire Bitcoin holdings to go all in on XRP. Now, he didn't reveal how much Bitcoin he held. We don't have that number. But the narrative itself caused a stir. It's not often you hear someone rotate fully out of Bitcoin, especially after holding since the $3,000 price region. Whether you agree with his conviction or not, stories like this change the emotional landscape. They bring attention, they fuel debate, and they highlight a growing trend. The XRP community has some of the strongest conviction in the entire crypto ecosystem. Even when the price is stable, the community narrative is powerful enough to push headlines. Now, let's touch on what's happening in the speculative corners of the market, because it's telling us something important. As Bitcoin volatility continues to shrink and traders get bored of sideways movement, speculative capital has started to flow into meme coins and low-cap tokens again. Tokens like Bitcoin Hyper and others are grabbing attention as the next crypto to explode. Most of these won't amount to anything. Some will run hard for a few days before crashing. But the presence of speculative energy is important. It tells you retail hasn't left the market. They're waiting for an excuse to jump back in. And when retail gets active at the bottom of a macro cycle, it's usually a sign that something bigger is brewing. Another story worth mentioning is Bitmine Immersion Technologies, a company claiming to have control over more than 3% of Ethereum's supply after a series of treasury pivots and accumulation phases. Now, whether the number is perfectly accurate or somewhat inflated, the headline matters, because it suggests that companies are beginning to treat crypto assets, especially Ethereum, as strategic holdings, not just speculative investments. If more companies follow that model, supply on exchanges could continue to drop, tightening the market even further. For story number 10, we have something that ties everything together: market positioning heading into next week. Traders aren't just waiting for the Fed, they're preparing for volatility. Liquidity is thin, funding rates are flat, open interest is steady but cautious. This is the type of environment where markets can move violently in either direction based on a single macro headline. If the Fed cuts rates and signals a dovish stance, Bitcoin could explode through 90,000 and potentially trigger a wave across the altcoin markets. If the Fed surprises markets with a more cautious tone, Bitcoin could fall into the low 80s, triggering liquidations and dragging the entire market down. That's why everything feels so tight. Everyone is waiting for someone else to act first. When you put these 10 stories together, the banking adoption, the Ethereum supply squeeze, the whale long positions, the institutional accumulation, the XRP escrow speculation, the macro pressure, the speculative altcoin activity, the company treasury plays, and the Bitcoin consolidation, you see a clear picture. The market is entering a transition window. We're moving from uncertainty into a catalyst-heavy environment, and the moves made in the next week could define the rest of December and the early part of 2026. As always, thank you for listening to today's Daily Crypto Roundup. Don't forget to rate the show 5 stars, drop a comment to enter the XRP giveaway, and let me know what you think is coming next week. Will Bitcoin break above 90,000? Will Ethereum start its supply-driven rally? Will the Fed spark a December surge? Or will volatility flip the other way? Share your thoughts. And as always, we'll see you at the top.